You don't have to be an expert in our industry to know that lumber has been the hot commodity these last couple years. And on this episode, I sat down with an economist for the wood products industry. We talk all about the markets and everything that's been going on. And more importantly, he provides a strategy and guarantees the next time you go to market that you will get the bottom bid. Okay, that's a lie. But now that I got your attention, you should go ahead and listen because I'm certain you'll get some great information from this episode. As together, we are building the future. This is the Building the Future podcast. I am your host, the lumberjack, Brett Thorne. On this show, we explore topics including construction, building materials, real estate, remodeling, the housing market, industry news, new products and trends, technology, government, everything you need for building the future. Welcome back to the Building the Future podcast. I am your host, Brett Thorne. And as we know, the economy has had a lot of turmoil in the recent months and more so in the recent years. And believe it or not, the economy has a major effect on our industry. And with that, I had the chance to listen in on a seminar from an economist that is the senior economist of wood products for Fastmarkets. And I've invited him to join me here on the show today. I would like to welcome Mr. Dustin Jalbert. Welcome to the show.
Thanks so much, Brett. It's a pleasure to be here today.
Well, let's start off, Dustin. Let's get you familiarized with the listeners just a little bit. Why don't you tell us a little bit about yourself, kind of what you're doing, and maybe how you got into your role?
Yeah, sure. So I've worked as a business economist covering the forest product space for almost a decade now. I think I'm on year 8 right now. And so I work for a company called Fastmarkets. A lot of you are probably more familiar with Random Lengths, which Fastmarkets owns on the price reporting side for kind of wholesale lumber and wood products pricing. So that's the parent company. And then also there's a legacy business called RISI, which was more on the sort of economic analysis side in the forest product space. And so I worked when I first started out in the industry, I worked with RISI. I worked actually as a junior analyst, junior economist, focusing on the pulp and paper side of the market. So that's actually where I started out. Now I've transitioned over to the wood product side, and I specifically cover softwood lumber in North America. And I've been doing that for about 4 years now. So our kind of day to day, we're looking at lots of economic indicators. Obviously, the housing market, is obvious, looking at housing starts and completions and permits, looking at, lots of economic data, industrial production, non-residential construction, a lot of industry data from, organizations like the WWPA or StatsCan. So a lot of the day-to-day is sort of going through processing, cleaning data. We do some forecasting too, but I would say like a lot of our day-to-day is sort of going through processing, verifying the data. We have a team of economists in North America that cover wood products specifically, 4 of us. And again, I do lumber, but we have an economist that does sort of housing as well as structural panels, another one that does non-structural panels and sort of bioenergy on the side as well, and a junior economist who focuses on EWP. So we've got a pretty big sort of in-house sort of group of analysts covering the market, and that's sort of the day-to-day. And again, sometimes on the side I'll be presenting at conferences and things like that, like where we initially met. And just a little bit about me. I'm based in the Boston area, so I live sort of, I guess, on the North Shore part of Boston. but I'm originally a Mainer, so a lot of love for my home state there. If that topic ever will come up, but that's a little bit about me.
Great. So you said 8 years in the wood product side of this. I got to ask, was that by choice or is that some kind of punishment?
Well, so just for clarity, I've covered wood products and lumber specifically for 4 years, but forest products, yeah, I guess about 8 years. I kind of fell into it, which again, bringing back to my main roots, the irony is that when I was young, I mean, the forest products industry unfortunately didn't have like the best sort of like image. Not so much. It was more just because of the economic sort of challenges for the industry. We have a lot of pulp and paper mills. I mean, there are certainly lumber mills and panel mills in the state of Maine, but a huge economic driver is pulp and paper. And mills are closing left and right because a lot of them produce graphic papers and newsprint and things that are kind of in products are in secular decline because everyone's got cell phones and computers now, right? Um, so the irony is, when I was young, it was I didn't really have an image of entering the forest products segment because it was just kind of an industry in decline, at least from my kind of worldview. Um, but so I got my college degree and got my master's in sort of finance and economics, and this was back in sort of 2012 when I got my master's. And at the time, the job market was still kind of tough, even for folks in kind of the white collar space. And before I knew it, this firm called Reese was available and had an opening. And one of my college professors said, "Hey, you're from Maine, right? So you have a background in you know a little bit about forest products, and you like applied economics. You should apply." And lo and behold, before I knew it, I was hired on board, and I was covering. Initially, I was on the pulp team, so covering some market pulp. So it was not what I had envisioned, but ultimately, I ended up circling back to the industry, and I love it now. I love covering the space. I love the applied economics side of things. It's also a very global industry, which I think that's one thing that was kind of in my in my kind of small little world growing up, it was hard to kind of envision, how big the space was and that there was growth in other areas like wood products or paper packaging. So, yeah, it's not something that I naturally sort of was gravitating towards, but now that I'm in the space and I'm covering it, I love it. So,
Yeah, it's funny when you're talking about the marketplace. I remember, heck, it's probably been almost 20 years ago now. I was in Chicago and got to go down to the Board of Trade, and actually got to go onto the trading floor. I was there with FC Stone, and of course, the trading floor back in those days. I mean, just the commodities. I mean, gas and pork bellies and all your grains, your corn and stuff. Just people everywhere. Still had the tickets and all this stuff. People just throwing the paper up and everything, and just hype and just a lot of excitement. And we went up to the lumber market. And I mean, it was just desolate. It was just quiet. There was nothing going on. And they always joke. They said, "Yeah, the lumber market, that's where traders go to die." So when you said it's on the decline, that just made me instantly think of that. I'm just like, wow.
but hey, lumber is. I mean, obviously, the last few years, it's been happening. It's quite a sort of an exciting market, and
Mhm.
compared to a lot of other commodities, especially within the forest product space. I mean, obviously, from the fallout from the global financial crisis and the housing crash, there's been a lot of sort of demand destruction and capital destruction there. But the last 10 years, it's at least a growing space. Housing is growing. Sort of with the broader economy. So, I mean, in a lot of ways, that makes it exciting, even beyond just the craziness that we've seen over the last 2 years here. But
Oh yeah, and I remember I had even talked to him while I was there, and I said, "So why?" I asked him, I said, "Why is it? Why is it so quiet here?" And they said, and this was well before this pandemic and everything that's gone on with these crazy lumber markets. They said, what? It's the volatility of the commodity. A lot of people can't handle it, especially your day traders. The people that aren't involved in lumber and don't know a lot about it and aren't specialized in it, they can't handle the volatility of it because there's just too big of swings. With all your other commodities, I mean, there's just so many people involved. I mean, the trades are small. I mean, there's small incremental changes where lumber, and I mean, obviously the last few years has shown massive changes. And I'm glad you brought that up because let's face it, I mean, lumber has been in the headlines more in the last 2 years than it's been in the last 20 years. Let's start back at the basics. When people see where lumber is rising, lumber's at an all-time high. What does that mean to the average user or the average consumer of that information?
Yeah, I mean, so when we think about it from the markets that we cover, right? When we look at like what Random Lengths reports, right? So in a normal market, sort of quote unquote normal market, the wholesale prices that Random Lengths reports, let's use the framing lumber composite price, which is sort of a broad index for the dimensional lumber, pre-COVID years, 300 to maybe mid 400s per thousand was sort of the normal range, right? And I remember back in 2018, we had a good run for lumber prices then, and we peaked out. I think it was around $580 per thousand board feet, and that was the record high, and that was a big deal, right? And then obviously prices corrected, sort of market corrected. We went into like a little bit of a housing recession for a year or so, and then things kind of picked back up heading into the early 2020. But yeah, the record high that we saw in 2020, I guess it was in early 2021, was around, I think it was around $1,500 per thousand board feet. So it was basically a quadrupling of prices in a matter of 12 months. And now we've pretty much corrected off that high, and we had another kind of local high this year too, around $1,300 per thousand on that wholesale price. But that's just unprecedented in nature, whether you're looking at it in nominal terms, so not inflation adjusted, or if you go back inflation adjusted. The last time, even when you adjust it for inflation, lumber prices, the last high that we saw was in the early 1990s around the spotted owl crisis. So even that was basically shattered by this record run. So I mean, it's hard to even put this volatility and these record highs in context, historically speaking, just because it's so out of whack from where we've been. So,
And for the everyday consumer, when somebody's talking about the lumber market, what does that market value represent?
yeah, I mean, so right now, you look at like, if you look at 2x4, studs in home centers or something like that, right? Right now, I think, those prices are down below $5 for an 8 foot stud 2x4. But, we were as high as, I think we hit like $8 for an 8 foot stud, maybe a little higher than that. I'd have to go look back. I don't follow the retail prices as close, but I mean, and then obviously when you start looking at sheathing prices, plywood, whatever, $70, $80, $90 plywood at one point for a sheet of plywood, like those are phenomenal prices compared to where we've been in the past. So, that's one thing that we've talked about with clients and folks on the market is, especially when you start talking about sheathing and things like that, there's just a tremendous amount of sticker shock that I think, especially your kind of over the shoulder kind of, sort of DIYers, when they go into a retail yard or they go into a home center, just looking at these prices, it's just, when we were at the peak, early this year and last year, just really exceptionally high prices.
Yeah, and it's funny too because a lot of times I talk to people, they'll be talking about lumber price, and I got to get clarification on what they're talking about. I
Right.
mean, are you talking about the commodity value on the CME, because that's the front month basically of where the value's at, and obviously there's a correlation between all your different species and all your different dimensions that match up to that carload of random 2x4 SPF. Or a lot of times they'll say, well, I hear futures are going down. I'm like, well, you do realize that futures being out there could be 2 months, could be 5 months, could be 8 months. A lot of times the price of that'll be cheaper because wood is so expensive now that they'll give you a discount if you'll wait to take delivery in 6 months. So they're like, oh, okay.
Yeah.
Some people don't go grasp it. So you always got to clarify for people what they're talking about when they're saying, "Well, I hear lumber's doing this."
Right. Yeah. It is always a point of confusion, right? Because it's, obviously a lot of the financial news networks, are reporting the futures price, and
Hmm.
there, I think there is some information to be gleaned from the futures price, but yeah, I mean, it depends on the contract month, and that all obviously doesn't necessarily flow right into the cash market, immediately. There's other factors that drive, sort of the futures market outside of sort of underlying demand and supply fundamentals, right? And it's a relatively illiquid market as well, so that's a huge factor on the future side as well. So between that and obviously, even if you're just looking at the cash price at the wholesale level, it takes time for that to flow through and the consumer to see it. So we heard that a lot, like, hey, we're hearing that lumber prices are down, but I'm not seeing it at my local yard, or I'm not seeing it at my local home center. Like, when am I going to get this, 50% move down that we're hearing about, on, Bloomberg, or we're hearing about it on the, reported on the news here. It's just, you're further downstream in the market as a consumer. And sometimes also the price that's being reported is not even necessarily what's happening in the physical market. It could be a futures price too. So there's
Hmm.
created a lot of confusion for sure, I think, for consumers in the market trying to buy the dip sort of thing, so.
Yeah, exactly. It's amazing when consumers get involved and they try to figure it all out. And it's like, wow, how much time you got
Yeah, right,
for
right.
me to try to explain how all this, the intricacies of all this works, and how it's very complex. And that's the one thing. So it's kind of misleading a lot of times when people just talk about lumber in general, or that, especially when the media outlets start getting, oh, lumber's doing this. No, that's not how it works. Like you said, I mean, it all has to flow downstream. It's, what are they talking about? Are they talking about cash? Are they talking about futures? Are they talking about even, front month future? Are they talking about forward months futures? I mean, there's so many factors.
Yeah,
You
right.
know what?
Yeah. Oh, go ahead. Yeah.
I was just say, I love the fact that you brought up random links, because let's be honest, anybody in the building materials, the lumber industry, buyers and sellers, I mean, random links is kind of the holy grail in a sense, as far as where the pulse of the cash market is. So tell us a little bit about that. What does random links represent, and what do they do?
Yeah. So, and just for clarity, I work as a business economist, so I'm on a different team than the Random Lengths folks. We have sort of an analytics business, which is sort of where the economist and sort of industry analyst, that side of the business that we work on. But and then the Random Lengths team is, as you described, sort of the price reporting side of our business within wood products. And so basically, Random Lengths has a team of editors that go out. Not only do they report the markets, sort of, they write on the markets and things like that, but they go out and they pull the market for prices. So they go pull sort of mills, as well as sort of people at sort of folks at the wholesale distributions, sort of level of the market. Uh, and they go out and they pull prices for hundreds and hundreds of different, and really, it's probably, I don't know it off the top of my head, but it's probably in the thousands, the number of grades and dimensions that they report in their as a part of their weekly report, and they do it biweekly as well. So they basically go out and pull buyers and sellers, and report a weekly or biweekly price for a lot of these various commodities in the wood product space. So it's a lot of work, takes a lot of sort of going around and sleuthing around and sort of verifying. And a lot of these editors have worked in the space for decades as well, so they have established relationships with their contacts in the market. So they go out and they do that on a weekly basis, and that really, to your point, is really the kind of the gold standard out in the marketplace, for understanding what the cash market is for a variety of sort of items out in the marketplace.
Yeah. And I remember, I've been in this industry my whole life. I grew up in it, and I've heard the term and known the term random links pretty much since day one. But it was years, it was probably, I don't know, 10, 15 years ago before I really understood what random links represented. And the fact that I remember, it was kind of an aha moment to me. And just like you said, they're actually pulling trade information, both from buyers and sellers, of actual transactions that are happening in the marketplace on every one of those species every single week. I mean, that's not just a number they make up or they think, well, we feel the cash market's here. No, those are actual trades. Now, it may be multiple trades and they're averaged together to come up with that number on that print day, but those are actual trades that are happening. Those are people buying and selling, and that is the dollar value that they are paying for it in the true marketplace.
Right, right. Yeah, it's transacted. It's it's in the spot market. It's not contracted volume or anything like that. So that's it's a lot of work, and it takes sort of kind of a lot of effort to kind of establish those relationships out in the market. And to your point, I mean, and again, I'm not the methodology. I'm not an expert on. It would be you'd have to have another episode to bring a random lengths editor on here to explain all the nitty gritty. But yeah, I mean, there's certainly if you're polling, X amount of folks on the buy and sell side, that you're going to have to weight that to some extent, each of those numbers based on their size, if they're a sawmill or in terms of if they're a buyer, understanding the amount of volume that they're producing or they're purchasing. But they go out and they poll a lot of people to sort of establish the price points on all these, whether it's dimensional lumber, boards, sheathing, non-structural panels, all those veneer prices, all those are kind of fall in their purview and that they cover, and they've been doing this for decades. So,
yeah, and they do a great job at it.
well, thanks.
Well,
I think so too. I think so too. So,
yeah. And again, I'll tell you what, people are still using it. I mean, they've been using random links for as long as I know, and they're still using it. They still rely on it. And I mean, it's critical to have that information.
yeah, it's tough to go out there and you can go and try and pull the market on a day to day, week to week basis. But I mean, if you have a huge slew of items that you're buying or selling, that's a lot of work, and you basically have a team of editors here that are helping do some of that work for you to gauge the market. And certainly there are weeks where you'll have people say, well, I think the market was a little lower than it was reported, a little higher, but for the most part, I think the team does a great job going out and reporting the market and talking with their sources on the ground, going to industry events, building those relationships. So, and they're a great group of people too, for folks that know that the editors, they're just a really good group of folks working out in the marketplace, and they really care about what they do. So, I think that's also important. People who care about the industry and care about, getting it right. So,
Mm-hmm. Well, I'll get you back into your sweet spot. I'll get you off the random links since that's not your forte. So, and you brought up a few of the things from the economic side of it, but talking about our industry, what are some of the things, other industry related factors of the economy that goes into what you do and the wood product side of it?
well, one thing I will say, Brett, that I think we talk a lot about housing starts, right? When we talk
Hmm.
about, when we talk about wood products and lumber, and rightfully so, right? I mean, when you look at total residential construction, new and sort of renovation and whatnot, at least for lumber, and it's similar for OSB, that accounts for about 75% of demand for wood products, right? So in the U.S. So so residential construction, it's a huge part of the demand base, right? But it's not everything, right? So I mean, and when you break down, for example, within residential construction, again, we really tend to focus on housing starts and completions and permit data, and no doubt that's a huge source of demand for the market. But I think the area that really kind of gets left off is repair and remodeling and renovation. And actually for lumber, a lot of people don't know this. For softwood lumber in the US, repair and remodeling is a larger consumer of lumber than new residential construction. And a lot of
You want to just say that again, Dustin? Because I think there's a lot of people who will be shocked by
repair and
that.
remodeling, so renovation, the renovation space accounts for more lumber consumption than new construction. When I say new construction, I'm talking about housing starts, single family and multifamily. And if you want to throw in mobile homes in there, those three categories. So, I mean, that's a space that has really been booming lately. And admittedly, repair and remodeling is one of those areas that is kind of tough to track. There's not a lot of great data that's really definitive like housing starts. Everyone follows the housing starts numbers. Um, but if you look at the census, for example, reports retail sales of building materials. So it's
Mhm.
building material and garden supply stores. And so it's just a nominal dollar spend. So it's not a volume, it's affected by inflation. That's the downside of it. But if you look at that number, there's been just a distinct level shift in expenditures on the home. And when you start kind of doing the math, it's not all just new construction that's accounting for that. It's both professional driven remodeling, driven by contractor driven remodeling, but also, particularly in 2020, a lot of DIY over the shoulder, sort of driven demand. And so that repair and remodeling piece, especially at the outset of COVID, had a huge impact on the demand side for lumber, and is, in our view, on top of the new residential construction, is a huge factor that kind of drove demand to soar in the second half of 2020 and early 2021. Um, so I would say, like, that's a category that drives lumber demand, especially for dimensional lumber and studs and things like that. Obviously,
I got a
hybrid.
question.
Oh, yeah, sure.
On that, talking about how much that the remodel industry uses the consumption of lumber being a larger number than new construction, is it always that way? Or is it just recently because of the pandemic and because of a lack of available homes?
That's a great question. So to kind of answer this, we got to wind it back sort of a decade and a half here. So if you looked prior to, say, 2005, so if you go back to like the 1980s and 1990s, if you looked at, this is based on our own sort of estimates at Fastmarkets, or sort of our proprietary estimates of lumber demand. If you look at, let's look at the 1990s. If you compared repair and remodeling in terms of total volume consumed of lumber versus new construction, so again, single family plus multifamily plus mobile homes, they were about even. So they were about even. So back then it probably would have been. I'd have to go double check this, but it was probably about like 35% each, give or take. Okay, so pretty balanced. When we headed into the early 2000s, we had the housing boom and bust, right? So heading up to the boom, to the peak of residential construction, new residential construction, you had new construction definitely took share of repair and remodeling, because we were building, at one point we were building basically
Mhm.
2 million homes, both single family and multifamily. So that share became outsized towards new construction. And then we had the housing bust from 2005 to, say, 2010, 2011, when housing starts basically collapsed. And we had, sort of the housing crisis. That's when repair and remodeling share kind of came back. And the way I describe it is, the both repair and remodeling demand and new housing construction fell. New housing construction fell just a lot faster than repair and remodeling did. And since that, we've been underbuilding homes, for the better part of a decade, right? I mean, we're just now at, 1.6, 1.7, for total starts. But we still haven't hit the peak of starts that we were back in, say, 2004, 2005. I don't think we'll probably ever get there, at least not in the next 3 to 5 years. But repair and remodeling has kind of kept its share. Part of that is just because not all repair and remodeling is discretionary, right? If you've got, hurricane damage or natural disaster repair, a lot of that is covered by insurance, basic maintenance on a home. So, some of that, less discretionary repair and remodeling kind of kept demand, from falling as much as we saw on the new construction side. And like I said, so, when we look at today, you brought up COVID, at the peak, when we look at sort of this renovation driven boom in 2020, we think repair and remodeling for lumber accounted, and this is not for OSB, this is specifically for softwood lumber,
Okay.
accounted for about 45% of demand. So that repair and remodeling piece, and new construction, so single family, multifamily, mobile homes, accounted for maybe like 30 to 33%. That repair and remodeling piece has come off because, again, some of it is just inflation. Consumer budgets are tied up now. Inflation within building materials, right? Within lumber, people are looking at replacing a deck now and saying, "Whoa, like the price has gone up a lot. Maybe I'm going to punt on this," right? Or maybe they pulled that project forward in 2020. So it is starting to rebalance again a little bit back towards the new construction side of the market. But that's a big piece of the story that I think sometimes gets missed in this whole discussion.
Oh, sure. And like you said, that's a tougher number to track because you don't have the permits. You can't go out there and say, well, there's a brand new home there that wasn't there, 6 months ago or 12 months ago. You don't know if that project had something added, a basement finished, a deck put on. It's a lot harder to define that and determine that. But I can easily see how, especially that consumer, either A, they can't find a new home, or maybe with these interest rates and with the cost of housing rise and everything, they can't afford a new home. They say, well, you know what? We're just going to remodel the one we've got, or we're going to do an addition, or we're going to finish out that basement. And I think, it's funny you mentioned 2020, a lot of projects got pulled forward. I laugh and joke, but there's a lot of honeydew projects that got done in 2020, like decks and basements and things like that, that I believe did get pulled forward.
Yeah, I mean, and it's the thing is, there's been some demand created for sure, right? Because you look at home equity levels. I mean, that drives renovation. The amount of cash out refinances that we've seen over the last, year or two here. Home equity, HELOCs, home equity lines of credit that have been taken out. I mean, that's certainly demand that's being created to some degree. But there's only so many, decks and fences and, these types of projects you can put up, right? So we do think it's kind of a balance. There's some new demand, but there's some that certainly got pulled forward to some degree. And I was one of those people. Like we were working on our home. We were doing paint. We were doing landscaping, we were, so I think a lot of homeowners, especially if they were maybe a little bit more concerned about having a contractor in the home with the pandemic and whatnot, I think a lot of people pivoted to these smaller, medium-sized projects. And, the treated lumber, the, short length dimension, appearance grade material, sort of cedar, things like that, fencing, all that was really, really hot in 2020 and early 2021. But that's cooled off now that, again, like I said, dimensional lumber prices quadrupled in 12 months. You're going to have some demand impact there. And the other thing to remember too is now that people are, things are normalizing, it seems like the impact of this pandemic is behind us. People are traveling again. They're outside the home more, and that's less time and money that is going into their home. So if they're going vacation more, they're spending less time at home, and some of their marginal dollars going back to the travel and service economy. And to some extent, that's coming at the expense of the renovation, the sort of the wood product side of the market.
So I want to get a little prediction from you here. And I love that we're talking about, the remodel industry versus the new construction. And everything we read, we know they say that we're underbuilt. And I don't disagree with that one bit. We know, and we've been ramping up ever since, and that goes all the way back to the housing boom, the housing bust. We were overbuilt, and then all of a sudden the pendulum swung a long way. We got rid of all that inventory, and then we were underbuilt, and we've been slowly kind of digging ourselves out of that whole good, healthy growth. And the pandemic hit and kind of really accelerated a lot of that. But we do still know that, as an industry, or I'm sorry, as a country, we're still a little bit underbuilt. But, one thing I don't hear anybody talk about, and how this all ties together, I'm going to try to bring it all right here and package it up for you, Dustin, is the baby boomers. And there's a lot of baby boomers, and they all own homes. Some of them own multiple homes. And in the coming years, a lot of those homes are going to be coming available. How does that affect the market when it comes to new home construction? And a lot of people, when they buy an existing home, they want to do changes to it. They want to do additions. They want to, go in and renovate it. So what do you forecast there?
Yeah, I mean, that's a really good question, Brett. And I think it's something we talk about a lot, but it's one of those points of analysis that is really tough to kind of wrap the head around. And you're right. I mean, there's a lot of focus on the millennials, right? We've got this demographic bulge that we're moving through. That's, a lot of people who are stepping in and want to be first-time home buyers. And, we've still got, we're having a bit of a correction here, but we've still got very low inventory out in the market. But the question is, what's going to happen when baby boomers, hit their twilight years and they sell some of these homes, or they pass on and they've got a larger home and that space comes to market. For sure. I mean, in some ways, it could unlock some supply from an inventory perspective, right? So maybe it puts less pressure on the new construction market. I think the big question, though, is where are those homes located, right? So, like, you think about the migration trends that we're seeing across the U.S. right now. People moving to the Sun Belt from the coastal cities, expensive coastal cities, or from the Midwest or the Northeast down south or west, sort of mountain states, places like that. How much of those homes that are going to come to market are actually located in those geographies, right? Like if you have a home that, you have someone where I'm from in Maine, and that in rural Maine, and that house comes to market, well, that's not really sort of meeting the demographic demand that we're seeing out in the marketplace, right? So that's a big question that we have, and I don't think we have an answer to that, right? Like that's a hard thing to measure, but certainly as these homes come to market, they're going to need work. To your point, right? I mean, the median home age in the U.S. right now continues to rise, and the median home age, I think it's around 41 or 42 years old based on the census data. So you think about, if that's the median home age, and okay, a lot of these homes maybe haven't had a big remodel done. I mean, think about how styles change in kitchens and open format, sort of open kitchen, open sort of dining room, living room formats. You look
Like
at a
40
home.
years ago, we still had shag carpet.
Right, right. You look at the main floor in a lot of homes built in the late 1940s, 1950s. It's very compartmentalized. Homes are built well. They're really, really solid. But a lot of people want that open format, right? So, like, okay, you talk about blowing out walls and putting some LVLs in there, and so I mean, it's a part of the market that is, again, it's hard to quantify because there's so much unknown about, okay, how much of these homes are in the right sort of in the right geographic location where the demographics are going, and then to what degree do they need to be remodeled. And I think a lot of them do need a lot of work, right? But it's certainly, like, for us, we think that repair and remodeling activity, there's going to be a baseline of 2 to 3% volume growth in activity just in that space alone over the next decade. And again, part of that is just the aging sort of housing stock in this country and how much work that needs to be done. And also, again, there's just we have a shortage of shelter. I mean, dynamics are switching right now. Obviously, there's a lot in flux with higher interest rates and more inventories coming to the market, but we think that's going to be an underlying sort of driver of demand going forward on top of the new construction side. So, but I know that's a roundabout answer, and that's probably not what you're looking for, but it's a big question, and it's
Really is.
It's a big question out in the marketplace. So
yeah, I kind of set you up. There's a lot to unpack. There are a lot of unknowns. I mean, and that's one of those things time will tell. So I don't want to keep you under pressure too much. And I won't ask you specifically what's going to happen with the lumber market in the future. We can talk about that off air so that way I know what to do. But what I do want to ask you about, Dustin, for the listeners out there, those that are involved in buying lumber, trading lumber and stuff, what are some key indicators that they can kind of keep an eye on or to kind of get a pulse on maybe what the markets are doing?
yeah, I mean, for sure. I mean, and you kind of alluded to this a little bit here. I mean, I think we're in for maybe a little bit of a slowdown in the near term, right? We've seen what's happening with interest rates. I mean, one thing that we've learned is that the market for housing seems to be more and more interest rate sensitive by the year. So really following that 30-year fixed mortgage rate that either, Freddie Mac reports or I think Mortgage News or some of these other sort of outlets report, because we do think, right now, we're still above. I think we're still above or pretty close to 6%, on the 30-year fixed, and that's really kind of knocking out a lot of marginal buyers, right? And I think when you look at another indicator we like to look at, reported by the Mortgage Bankers Association, purchase applications for homes have come down substantially from the peaks that we saw, say, in 2020 and 2021. We're back at or kind of maybe even below sort of 2017, 2018 levels for purchase applications, which are not horrible, but it's a long ways from where we've been. From where we've been just a few a few months ago. So I think I would be watching that, because I do think there's a chance that interest rates are going to sort of correct downwards here. And when that happens, you're going to have more buyers come into the market that are maybe just kind of waiting things out, right? I think a lot of people's expectations of home prices has suddenly gotten a little bit more bearish. So no one wants to step in and buy a home if they think the market's going to go down 5-10%, from a home price appreciation standpoint. That's not our forecast, but I think there's a lot of bearishness out there. So I'd be watching mortgage rates for sure, because I think, if we have more buyers stepping back into the market, home builders are going to feel more comfortable, stepping in and keeping construction activity going. So, those are kind of a couple high frequency indicators. When I think about, obviously the obvious ones, new home sales, housing starts, kind of watching those, sort of, I think we'll probably have a little bit of a lull here the second half of 2022, but things will pick back up, back in 2023. So I'd just be watching that data. If you see housing starts pick up, that could kind of bring some tension in the lumber market and the wood products market. I mentioned building material sales. The census reports that data. The tricky thing with that is it's still very high, but it's affected. A lot of the reason it's high, it's impacted by inflation, even though volumes are starting to kind of flatline. So, those are the kind of the data points I'd be looking at, that are relatively high frequency to understand what's the demand side look like. Is demand starting to cool here? On the supply side for lumber and wood products, a lot of the data is out there sort of proprietary from like the WWPA or, StatsCan. So it's a little bit harder to kind of dig into that if you're kind of more casual sort of observer of the industry. But certainly on the demand side, those are kind of some of the things I'd be looking at to try to gauge, okay, there's a little bit of a cool down in housing that's happening. Where is there going to be a bottom when, if interest rates come down, this pulls more buyers back into the market. And we kind of get some tension here on the demand side as things have really loosened up in the lumber market the last few months here. So.
That's great. A lot of good information there. So, Dustin, if listeners out there, want to find out more, want to follow you or get in contact with you, what's the best way to do that?
Sure. So you can reach out to me. I'm on Twitter. So if you want to look up 2x4caster, 2x4caster, that's my Twitter handle. So feel free to send me a message. Happy to talk to you about markets, or if you have any questions about anything we talked about here today. So.
That's great. And before I let you go, do you have any closing thoughts for the listeners?
Yeah, I mean, the last thing I would say is, again, kind of alluded to this. There's probably going to be a little bit more, a little bit more of a bearish market here in the near term. Looking at the demand side, thinking about residential construction, but as we talked about earlier, there's still a lot of good fundamentals out there. I think once we get through some of this volatility here in the housing industry, there's a lot of good underlying demand, thinking about demographics, thinking about the repair and remodeling side. So I think we're primed for 5 to 10 years of positive growth in the building materials industry. But we might have a little bit of a hiccup on the road here in the near term. So.
Yeah, it seems like our industry's always got it's always got some ups and it's always got some downs coming. So
yep, never a straight line. So
keeps it interesting, doesn't it?
Yeah.
Dustin, I want to thank you again. I appreciate your time and I appreciate you sharing with us today.
It's a pleasure to be here, Brett. Thanks for inviting me.
This is the Building the Future podcast. Thank you for listening. Please subscribe. Please like and share. You can find out more at our website, www.buildingthefuturepodcast.com. Together we are building the future.